DeepSeek, Trump tariffs, and dollar strength. Just as the technicals were predicting last year, the markets are in for increasing volatility, and the buy and hold strategy may not work anymore. I believe those that are able to be nimble and get in and out of trades stand the best chance of success in the years to come. Nothing I'm about to share is financial advice, so please seek out a licensed financial advisor before making any financial decisions. Welcome back, cool cats. Thank you to everyone who offered their support and condolences for the passing of my aunt. I appreciate each and every one of you. For any new viewers, I want to quickly point out and explain my line and box system. Every line has its own significance. If it's really thick, like this red line right here, it means that it goes back for many, many months, possibly even multiple years. Whereas these smaller, thinner lines have less significance, but can still have intraday significance. And then the boxes here are the supply and demand zones that I draw. So as we can see on Friday, SPY got very, very close to this main red resistance line, and just like it's rejected the past few times that it's hit it, it rejected again very sharply. It got up into this mini supply zone and began its rejection, and also even broke out of this minor ascending channel here in orange. If I zoom in further on the 2-hour time frame, we can see that SPY was actually forming this rising wedge for multiple days. It had this initial false breakdown and it kept pushing up in this channel until it hit this main resistance level. And although it was delayed, the rising wedge appears to have now started breaking down. But something to note is that we're now stuck between this main resistance line in red and this main support line in blue. Both of these go back many, many months. And there's a very real possibility that SPY could come all the way back down to about 585, hit this main support, come back up and hit around 610, 611, and come back and forth and back and forth. And we may see a heck of a lot of volatility in the markets in the months to come. Zooming out to the daily time frame, as I've covered in many videos before, if this giant rising wedge, this multi-year rising wedge actually ever plays out and it breaks this main support line here, we could actually see SPY targeting basically around 535 to the downside over the course of multiple months. But in the shorter term, I could potentially see SPY coming down and touching around 595 to 596. We may see a bounce there. If it doesn't hold up there, we have another demand zone between roughly about like 590 up to about 593. And again, if it hits this main support line here, I would be interested potentially buying longer dated calls, maybe a few weeks out, as long as support holds up. So if SPY hits somewhere between like 586 to 587, depending on which day it were to hit this, definitely would be interested in looking at calls. Switching over to QQQ, or as somebody else called it, my game of pickup sticks. We've got a lot going on here, but every line has its own significance. This orange line here has been going on for multiple months, and it holds a lot of significance. So the fact that we've broken down below it again, as well as this very thick blue line, it shows that the market definitely turned bearish. And similar to SPY, QQQ was also setting up a rising wedge for multiple days. It had an initial false breakdown and kept pushing higher. But as soon as SPY rejected, QQQ started rejecting as well. They tend to run in pairs. So the main thing I want you to notice right now is this very light green channel right here. This was the upper resistance line of this descending channel before. Notice how we've gotten below it again, but we are getting into this demand zone, somewhere between about 517 up to about 520. There's a potential that we could get a bounce there. If we don't, we could head down to this demand zone between about 512 to 515. And again, if that doesn't hold up, then we could see QQQ come all the way down to about 507 to 508. And then the next support line would be basically right around 500 even. And if that for some reason couldn't hold up, then my goodness, the market would be awfully bearish, and we could actually see QQQ coming all the way down to the main support line of this descending channel. And if it intersected right here with this purple line, that is a much, much larger channel. We even have to zoom out to see the channel right here. If QQQ ever got down that far, and that would be about like 490, give or take, depending on where it hit, I would absolutely be looking for longer dated calls, probably weeks to months out, as long as that support held. On IWM small caps, we had this ascending triangle pattern that was targeting somewhere around 232, but as we can see, the upper resistance line of this ascending channel here that it's in yellow, it held up and forced this back down. This is also a supply zone here, so there was a lot of supply to push this back down. As you can see, IWM is getting close to the lower support line of this channel again. So if it hits around 222.60 to possibly 222.80, that might be a good opportunity to buy calls. If that doesn't hold, then the lower support line of the much wider ascending channel could come into play. And we could see IWM come down to about 220 even, and that could also potentially be a good place to buy calls. Now, as I've covered in previous videos, even if that support were to break, there is a demand zone down here. It's a pretty wide demand zone, but between basically 209 to about 215, there's an awful lot of demand there, and I would expect that calls may pay out if we actually get down to that level. Okay, we're going to start moving through the Mag 7, and then we're going to move on to Bitcoin and Dogecoin as well. So for anybody that was paying attention, they would know that NVIDIA broke convincingly below this very main support line. It broke below it before, but then it clawed its way back up, but now it broke way below it. And so I have to question if the big rising wedge pattern that I've been covering for months is finally playing out. Now, if it is, that means that NVIDIA would be targeting somewhere around $95 to $96 a share. And we can see that right now it's in this coiling symmetrical triangle pattern. And that pattern, even by itself, is targeting, if it were to break back to the upside, targeting about 140 to the upside or about 105, 106 to the downside. There is, of course, the lower support line of this descending channel right around 117 to 118, which could lead to a bounce, but I really have to wonder if DeepSeek is the catalyst that's really going to hurt hardware suppliers for GPUs. Looking at Meta, this one honestly is kind of blowing my mind. I mean, this was such a long-term pattern that I wasn't convinced that it was going to play out, but if you look at this, you had a lower support line here in orange, upper resistance line here in orange. This was essentially an ascending triangle. And if you take a measured move right here, if you measure from here to here and drag it over, we can see that basically it took multiple weeks, but Meta has actually fulfilled this pattern target and then some. And even on the shorter term time frame, if we look at the symmetrical triangle here in blue, when we look from where it based from and we take that measured move from here to here and drag it over, we can see that it fulfilled that, pushed a little bit above it, pulled back again. It's in this ascending channel here in orange right now. We had a bit of a false breakout, but I have to question, is this support going to hold? If it does, we could see Meta come down and touch maybe around 676 and then continue to push back up. If it did, it could come all the way up to about 746, 750. Or if it breaks this channel, then there's a little bit of support underneath that, right around 650 even. Then around 638 to 640, and then again around 625 to 626, and then again around 610. And you know how I love my RSI patterns. We had an RSI resistance on the daily time frame, and Meta broke through that resistance in order to fulfill the pattern targets. It had a very bullish, impulsive move to the upside, and now I have to wonder if it's overbought and going to start correcting. Pretty obvious that Microsoft had a double top here, and it actually forced it back below the main bullish channel support and into this bearish channel right here. It's a minor bearish channel. So we could absolutely see Microsoft come down and hit in this demand zone somewhere between around 403, 404, possibly up to 407 to 408. We might see it come all the way down there before we get a bullish bounce. And if we zoom out to the daily time frame, we look at the RSI, we see we had this upper resistance line, we had a lower support line, we broke out a little bit, broke down again, we're actually below that resistance line again. And if you don't already know, ascending channels eventually typically break to the downside, whereas descending channels typically break to the upside eventually. So if we're breaking this main bullish channel, then there's no telling how far this could fall. So far, Tesla has had 2 false breakouts above this yellow resistance line right here that goes all the way back to December 18th. And it's also below this key level of roughly about 415. So as long as we're below these resistance levels, Tesla is still bearish. However, on the daily time frame, when we look at the RSI and this resistance line right here, we can see that at least on a daily time frame, Tesla actually broke out above that for strength. So there is always the possibility that Tesla could come down a little bit. Maybe it will try to retest this 384 or 385 level. But if it can break this resistance, we actually may see Tesla continue to push back up. Next resistance would be somewhere around like 446 to 447. And then obviously all-time highs around 488, 489. On Amazon, we had a failed attempt to break above this previous support line of this longer-term ascending channel. And if this is a valid rising wedge, that would indicate that Amazon is targeting around 218 to the downside, which would break the previous low of 218.93. And on the daily RSI, we can actually see that it's formed bearish divergence where the RSI has made this lower high, whereas price has actually made a higher high. And so that is not a very bullish thing right now. Taking a look at Apple, this was this main long-running resistance line that I pointed out months ago, and I said that this is probably the perfect level to short from, and you can see we went from 260 all the way down to 218. So if anybody caught this short, congratulations, you probably made a lot of money if you held it all the way down. And this red resistance line was basically every time we got up to it, we rejected again. We had a false breakout here, rejected, kept moving down. Finally got into this bullish ascending channel here in orange, but as you can see, we had earnings pushed us way up, and then that was a false breakout, and we came right back down and we're back below this main resistance line again. I've got to zoom out on the daily to look at it, but if the market turns bearish on Apple, and it appears it already may be, we could absolutely see Apple come down to basically around 220 again, maybe see another bounce there. And if that support doesn't hold, there's some minor support levels along the way, like 215 to 216, 205, but we could actually see Apple come all the way down to about 200 even, where we have this main support level as well as another ascending support level where they intersect. So that 200 even could be an excellent long entry. Now, alternatively, we kind of just wicked below this support line. So if we actually started to push up from there, there is the potential that Apple could try to come back up and retest this previous all-time high around 260. But my bias is towards the downside. Google hit this main red resistance line from where it's rejected every single time that it's hit it before, and it rejected again. But as crazy as it may sound, if we zoom back out, and I've covered this in a previous video, if this orange symmetrical triangle here that goes way back, if it's legitimate, the measured move of that is actually targeting a Google of roughly about 222 per share, and it would have to break that main red resistance line in order for that to occur. And it would also have to break the previous support line of this ascending channel somewhere around 211 to 212. So there's definitely a lot of resistance it would have to get through, and at least in the short term, it's inside of this ascending channel here in orange, and it just hit the upper resistance. So if it decides to break support here right around 204, there is the potential that Google could come all the way back down and retest around 194 to 195 before it gets another push to the upside. Or at minimum, it might retest this basic like 200 even level. It's a very key psychological level. Moving on to Dixie, we have a lot going on here. I've covered this rising wedge in blue here, and I talked before about how that was targeting basically around 105.40 to 105.80. Now, Dixie got into this descending channel here in blue, and then it broke out. It formed this rising wedge here where we can see it actually, that fulfilled. It broke down, but now appears to be in this minor ascending channel here in orange. And if this is legitimate, if this holds up, we will expect Dixie to pull back to basically around 108 even, maybe even 107.98, around in that area, but it may continue to push up in this channel until it breaks down. And of course, the bullishness for the dollar seemingly came about due to Trump's tariffs. And one thing that I always say is you can follow the technicals as they currently are until a fundamental catalyst comes along and wrecks the markets. Technical analysis shows you what the market sentiment is at that moment in time. If something else comes along, you can't ignore it. So there's the potential that this big rising wedge actually continues to play out, but there's also the potential that the market is pricing something entirely new in right now, and Dixie may continue to rise. And if it does, I would anticipate Dixie coming all the way back up to about 109 to 110. This is the main supply zone up here. And unfortunately, I can't show it on Thinkorswim. They don't have access to it that I'm aware of. If they do have access to the US 10-year Treasury notes yield, please leave that in the comment section below so that I can add that to my next video. But basically, it's in an ascending channel, and yields got below that right around 4.535, but there was a falling wedge that was forming right into that support line that would indicate that yields might be heading higher up to about 4.676 or higher. So you should definitely keep the 10-year yields on your radar as well. While we're on the topic of yields, let's take a quick look at TLT for long bonds. If you were following along with my videos, you knew that TLT was in this descending channel here, and that when it touched this lower support line, that was potentially a good entry for longer dated calls. But right now we can see TLT has actually formed this rising wedge, and if this plays out, we could see TLT come all the way back down to about $86. Because it is currently below this main resistance line around 88 even. If it continues to fall down, we would expect it to fulfill this pattern target. And frankly, with the amount of money printing that I've talked about in previous videos that could happen if we have a black swan event, it's very difficult for me to be bullish on any sort of longer dated bonds. Because even in a recessionary environment, I could see a scenario where they basically force the Fed to buy up longer dated treasuries. And if they do that, that could lead to hyperinflation, in my personal opinion. Some people will try to tell you that you can't chart the VIX, but they're just flat out wrong. Charting the VIX is one of the many ways that I've often been able to determine when the market's about to have a big downturn. And I want you to particularly pay attention to this big red resistance line right here. This goes back all the way to January of 2022, and it's held up almost every single time that we've touched it. The VIX has rejected sharply, except for back in August. I wonder why that was. So I'm sharing a little trading secret here. This is something you need to watch for on the VIX. The VIX, by its very nature, is mean reverting. Whenever it has spikes, it always wants to go back to support. We can see here this little blue line, this resistance line. We came up, hit that main red resistance line, started pulling back. Every time we hit this resistance line, we rejected. We actually broke above that on Friday, and I knew that was the indication that the market was about to break down. So this is something that you can watch on your own charts, because this pattern right here, it repeats on the VIX. Now, all that said, there is the possibility if the market continues to sell off, we could actually see VIX come back up to about 22 again. Now, as I've been sharing on the ADD, the market breadth indicator, we have this upper resistance line here and this lower support line here on the daily time frame. And when I zoom into the 2-hour time frame, we can see a little bit more of the microstructures. The overall market was in this descending channel here in blue. It broke out on Thursday, but it hit that main upper resistance line and then started selling off on Friday. Zoom in and even more on the 1-hour time frame, we can see that on Friday, the overall market was already going red. It was already below the key zero line. It pushed back up a little bit, but then it hit the resistance line of the descending channel and rejected sharply. And this is why I focus so heavily on the Mag 7 stocks, because they make up such a large percentage of weightings. They can prop the market up when it should be falling. But just keep in mind, the overall market is already getting close to the lower support line here. And if you visualize this here, this is starting to look like a falling wedge. So we may see a bullish breakout in a day or two. Taking a look at Bitcoin, I'm not going to go over all the macro levels again. I've gone over that in previous videos. And if you're curious what these curved lines represent, please check out some of my previous videos. Zooming in, this is on the weekly time frame here. You can see this has been going on for multiple months, and it's a very well-defined rising wedge pattern, which is a bearish pattern. This is indicating that Bitcoin could push up potentially all the way up to like 125,000 per Bitcoin, but it, of course, would have to break through this main resistance line. Now, if it were to break down basically from where it is right now, if it broke this main support line somewhere around 97,000 and it confirmed it as new resistance, we could see this pattern is targeting a Bitcoin of basically around anywhere between like 58,000 to 62,000, depending on where it hit this lower support line of this previous ascending channel. Now, if Bitcoin continued to push up from here and it actually hit the apex, we could see it hit that upper, about 124, 125K, and then pull back and basically hit this previous support line right here around 73 to 75,000. And Dogecoin was the one requested ticker I actually had the time to squeeze in. This is zoomed out on the monthly time frame. We can see this is on a log scale. We have an upper resistance line here and a lower support line there. They're curved because of that log scale. We can actually see how Dogecoin actually broke this previous support line, rejected off of it, acting as new resistance, but yet treated this basically 6 cents line as new support and is continuing to push higher. When we zoom in on the weekly, we can see this previous all-time high, 0.7488, which, basically, let's just say 75 cents. There is currently a rising wedge on the weekly time frame. The apex of that, I don't think it's just a coincidence that it's basically targeting previous all-time high. Potentially could come all the way up to about 90 to 95 cents. But if it can't break the previous all-time high, let's say it comes up to there, we could see this pattern targeting basically around 18 cents per Doge. Or at the very least retesting this previous resistance here around 22 to 25 cents. So in the coming weeks, we could see Doge push back up to, maybe 62 to 63, come back down and test about 41 to 45. It could bounce around back and forth until this entire pattern comes to fruition. Now, with everything going on, I did not have the time to look into everyone's requested tickers from my last video, so please feel free to leave your requests in the comments below, and I'll try my best to include them in the next video, or perhaps even make a few YouTube shorts throughout the week with the analysis. And also, please help me reach 1,000 subscribers by my birthday in April by liking, sharing the video with anyone who might be even remotely interested in the markets, and subscribe so you won't miss any market-moving updates. Taking a quick look at investing.com's economic calendar, we've got multiple catalysts coming out this week, but I think two of the most important, of course, will be JOLTS job openings on Tuesday, possibly initial jobless claims if they come in a lot higher than expected, but non-farm payrolls and unemployment rate on Friday I think are going to be the biggest economic catalysts. I'm not completely ruling out the Eurozone CPI on Monday because that could affect Dixie. Then quickly taking a look at Moomoo's earnings calendar, this week is jam-packed, mostly Monday through Thursday. On Monday, we have Palantir and Mizuho Financial. On Tuesday, we've got Google coming out, as well as Merck and Pepsi, AMD, and AMZN. On Wednesday, we've got Novo Nordisk, Toyota, Disney, Qualcomm, ARM, Uber. Big names. And then on Thursday, we've got Amazon, Eli Lilly, AstraZeneca. So this whole week is just going to be jam-packed with earnings and economic catalysts. And who knows what Trump's going to say next. And don't forget to stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.